Have you ever looked at your tax bill and thought, how can this number possibly be right? Maybe you just stole a property, got a big bonus, or retired, and suddenly Uncle Sam is your biggest expense. If that sounds familiar, you're not alone. Today, we're talking about how to keep more of what you've earned with smart, simple, and totally legal strategies that every woman should know.
Welcome to She Wins, Women, Wealth, Wisdom, and Legacy, the podcast where financial empowerment meets fearless living. If you're a woman who's built a life with purpose and is ready to align your wealth with what matters most, you're in the right place. Your host, Carol Eddy, is a certified financial planner, financial educator, and passionate advocate for helping women live fearlessly and leave a legacy. Whether they are preparing for retirement, managing an inheritance, or simply looking for trustworthy financial guidance, Carol has helped her clients feel confident in their financial plan for over 25 years. Each week, she'll share insights and practical strategies to help you create financial freedom, navigate smart money choices, master your money mindset, and make winning decisions now and for the next chapter of your life. No intimidation, no overwhelm, no jargon, just wisdom, clarity, and the confidence to manage your wealth, embrace your power, and craft a future you love. Welcome to the show. As a reminder, the content shared on this podcast is intended for informational purposes only. It does not constitute personalized financial advice. For guidance tailored to your specific situation, you can schedule an appointment with Carol. This is an independent podcast not affiliated with Money Concepts Capital Corporation. All securities offered through Money Concepts Capital Corporation member FINRA SIPC.
Welcome, everyone. Today, we're diving into a topic that can feel intimidating but doesn't have to: taxes. We're not talking about loopholes or complex spreadsheets. We're talking about smart, everyday moves to help keep more of your money, give in ways that matter, and retire with peace of mind. So grab a cup of coffee. We're going to make taxes make sense. Part 1, why taxes feel so confusing. Let's start with this. Most of us were never taught how taxes really work. We learned how to earn money and how to spend money, but not how to keep it. When I meet with women who've built successful careers or businesses, I often hear the same thing. I make good money, but I feel like I'm losing so much of it to taxes. That's because most people do tax filing, not tax planning. Filing is what happens in April, when it's too late to change the outcome. Planning happens all year, when you actually make a difference, or at least you can. Story example 1, Kate's tax shock. Kate ran a marketing firm for 20 years. She built it from the ground up. Long nights, missed vacations, and a lot of heart. When she finally sold her business for just over $2 million, it felt like freedom. She bought herself a little lake house, helped her daughter with a down payment, and finally took a breath. Then tax season came. Her accountant called and said, "Kate, you owe over $400,000. What happened? She hadn't done any planning before the sale. No timing strategy, no charitable giving, and no reinvestment plan. She filed her taxes like she always had and lost nearly $500,000 to taxes she could have reduced. Does this work every time? No, but it can. Part 2, the simple framework that saves you money. Let's start with a simple idea, the 3 money buckets. Every dollar fits into one of these 3 buckets, and how you use them determines how much tax you'll pay. Bucket 1 is your now money. You pay taxes on this bucket every year. It includes savings accounts, checking, and regular investment accounts. When your money earns interest, dividends, you pay tax each year. Think of this bucket like your daily spending bucket. It's easy to access, but gets taxed along the way. Bucket 2, later money. You'll pay taxes on in the future. These are accounts like your IRA, 401k, or traditional retirement plans. You didn't pay taxes when you put the money in, but you will when you take it out later. If you have most of your wealth here, your future tax bill could be big because every withdrawal counts as income. Bucket 3, never money. This is the golden bucket because you're not going to be paying taxes. It includes things like Roth IRAs, certain types of life insurance with cash value. Money in this bucket grows tax-free, and you don't pay taxes when you take it out. It's like having a garden where you don't have to share any of the harvest. Story example 2, Emily's 3 buckets. Emily retired from a long career as an engineer. She had savings in all 3 buckets. When she built her retirement plan, it was decided each year where to take her income from, a mix of now, later, and never money. In high income years, she pulled from her Roth, which had no taxes. In low income years, she took from her IRA and paid some tax, but not a lot. It balanced out beautifully, and she stayed in a lower tax bracket every year. Part 3, smart tax moves you can do anytime. Number 1, be kind and strategic with giving. If you're charitably inclined, here's a smarter way to give. Instead of donating cash, donate investments or stock that have grown in value. Why? Because you get credit for the full amount, but you don't pay taxes on the growth. It's a win-win. You can also use something called a donor advised fund, which is just a fancy name for a giving account. You can take the tax deduction now, but give the money to charities over time. One woman said it made her feel like she had her own mini foundation without the complexity. Number 2, choose when to take income. Sometimes it's not about how much you make, it's when you take it. You can plan your income to keep yourself in a lower tax bracket. Let's say you know next year you're going to earn less. You might delay a bonus or a sale until then. Or if this is a high income year, you could prepay some expenses or donate before December 31st to lower your taxable income. Timing is really everything. Number 3, coordinate your team. You might have a CPA, a financial advisor, and maybe an attorney, but are they talking to each other? If they're not, you're missing opportunities. Because when your professionals coordinate, your plan gets stronger on every side. I've seen women save tens of thousands simply because we've coordinated with the CPA and estate attorney during the planning and updating process. Number 4, don't wait till April. If you wait till tax time to think about taxes, you've already missed your best chances to save. Planning happens before December 31st, not after. The key question isn't, what do I owe? It's what can I still control before the year ends? This is when you work with your advisor and CPA to make wise, tax-efficient decisions. Part 4, smart tax moves for women business owners. If you're a business owner, your tax opportunities are even greater. And yet, I hear about so many women who are paying far more than they should because no one explained the basics. Number 1, choose the right type of business. How your business is set up, like an LLC or an S Corp or a C Corp, affects how you pay taxes. Here's an example. Sandra owned a design studio and was paying self-employment taxes on every dollar of profit. If she restructured as an S Corp, she might save over $20,000 a year in taxes, legally, just by how she paid herself. Number 2, deduct what's reasonable. Women often underdeduct because we don't want to get in trouble. But if an expense is ordinary and necessary for running your business, it may qualify as a deduction. Examples could include part of your home office, continuing education, business travel, professional fees, your retirement plan contributions. It's not cheating, it's smart. Your CPA can help you decide what you can deduct. Number 3, pay yourself intentionally. Business owners have more options for saving for retirement than employees do. You can create retirement plans such as a solo 401k or a SEP IRA, allowing you to set aside significantly more each year and reduce your taxable income. Let's use Dr. Lisa as an example. She's a dentist who is paying nearly 40% in combined taxes. When she set up a defined benefit plan through her practice, she saved $110,000 in taxes her first year, and it started building her retirement at lightning speed. Number 4, think about the long game. If you plan to sell your business someday, start planning years before you sell. You might be able to spread the sale over time to avoid a giant one-year tax hit, or gift small pieces of ownership to your kids through a trust, or give part of the company to charity before the sale to reduce capital gains. That's how wealthy women stay wealthy. They plan their exit strategies. working with their advisor and CPA before taking action. Part 5, selling a property or stock without losing half to taxes. If you've ever sold an investment or property that's grown in value, you know what happens. You celebrate, and then you get the tax bill. That profit is called a capital gain, and it can feel like a gut punch if you weren't ready for it. But there are ways to reduce it. Your CPA and advisor can help you with deciding which path is best for you. But here's some ideas. Number 1, spread it out. You don't always have to take all the money in one year. For example, one example is an installment sale, where you can receive the money in smaller payments over time and spread out the taxes as well. This can keep you in a lower bracket and ease the sting. Number 2, trade, don't sell. If you're selling a rental or investment property, you may choose to use something called a 1031 exchange to buy another property without paying taxes right away. It's like trading up, and the tax waits until later. This is something you discuss with your CPA. Number 3, give and gain. Let's talk about Evelyn. She owned a rental property worth $1.2 million. If she sold it outright, she'd owe more than $200,000 in taxes. Instead, if she placed the property into a charitable trust before the sale, the trust sells it, then she can get a tax break right away. It can also be set up so she can receive about $50,000 a year for life. Then when she passes, the rest goes to whatever charity or charities she chose. That's smart, purposeful planning, not just number crunching. Part 6, tax smart moves for retirement. Retirement should feel like freedom, not fear. But if you don't plan your taxes carefully, they can sneak up on you. It's not how much you've saved, it's how you spend it that determines your taxes. Number 1, mix and match withdrawals. If all your money is in pre-tax accounts like IRAs, every dollar you take out gets taxed. But if you have a mix, some Roth, some after-tax savings, you can choose where to pull from each year to control your tax bracket. It's like adjusting the thermostat in your house. You can keep things comfortable instead of overheating your taxes. Number 2, watch out for Medicare costs. This one surprises people. Your income determines your Medicare premiums. Even a dollar increase in income can push you into a higher tax bracket, costing hundreds more per month. A good advisor helps you plan withdrawals and capital gains to possibly stay below those lines. Number 3, give smarter from your IRA. Once you turn 70 and a half, you can give directly from your IRA to charity, up to $100,000 a year, and it doesn't count as taxable income. It's called a qualified charitable distribution. It's perfect for women who already give regularly and want to reduce their taxable income. Number 4, think of your heirs. When your children inherit your assets, taxes follow them too. If they inherit a traditional IRA, they must empty it within 10 years and pay the taxes. But if they inherit a Roth, they won't owe a cent. Sometimes paying tax now by converting it to a Roth can be the best gift you've ever given your kids. Part 7, real results. Remember Kate, business owner who owed $400,000? She could have set up a giving fund, do a partial Roth conversions every year, and adjust her withdrawals. And let's think of another example. Majorie inherits $3 million after her husband passes. She could walk through each account and label her now, later, and never buckets and build her tax-efficient plan. Part 8, your takeaways. Let's keep this simple. Number 1, plan before April. The best tax moves happen during the year, not after it's over. 2, get your team talking. When your CPA, advisor, and attorney communicate effectively, your taxes can be minimized. 3, give with attention. You can support causes you love and still save on taxes. 4, mix your buckets. Use all 3, now, later, and never, for more balanced tax payments. Number 5, stay curious. Don't just ask, how much do I owe? Ask, how can I pay less, the smart way. If today's episode made you think, I could be doing this smarter, you're right. And it's easier than you think. Reach out to me if you would like to explore this further. I'd be happy to work with you, your CPA, and your estate attorney to find the best path. Thank you for joining me today. Remember, financial confidence isn't about knowing every detail. It's about understanding what matters and taking one smart step at a time. I'm Carol Eddy, helping women lead with clarity, calm, and confidence. Together, we grow stronger and wiser with every decision. Until next time, stay empowered and keep more of what you've earned. Thanks for listening.
Thank you for joining us today for the She Wins Women, Wealth, Wisdom, and Legacy podcast. If today's episode sparked a shift in how you think about your money, your future, or your legacy, imagine what's possible when we walk this journey together. And if you found value in today's conversation, please share this episode with a woman you care about. Together we rise and we shine. If this inspired you to take charge of your financial future, don't stop there. Download your free guide, A Woman's Guide to Triumph in Every Decade of Her Wealth, by clicking the link on the screen or in the show notes. It's designed to give you powerful tools and clarity at every stage of your wealth journey. And be sure to follow or subscribe now so you never miss an episode. Until next time, stay wise, stay empowered, and remember, it's time to rise, lead, and thrive with your wealth, your wisdom, and your legacy. As a reminder, the content shared on this podcast is intended for informational purposes only. It does not constitute personalized financial advice. For guidance tailored to your specific situation, you can schedule an appointment with Carol. This is an independent podcast not affiliated with Money Concepts Capital Corporation. All securities offered through Money Concepts Capital Corporation member, FINRA SIPC.